Hi, welcome to Bond Bytes, a daily bond market highlights from INR bonds. I'm Arjun Parthasarathy. And the US Federal Reserve has sounded out rate hikes from March, even as they stopped the bond buying in March, largely on worries of rising inflation expectations in the US. US inflation is at multi-decade highs and doesn't seem to be coming down given a very, very strong labor market and the wage push inflation is one of the biggest threats to the US economy at this point of time and the global economy. And in India, in sympathy to the Fed's rate hike stance and inflation hawkishness, the GSEC yields have gone up. The 10-year GSEC yield has risen to 6.75%. Just a couple of weeks back, a new 10-year bond was issued at 6.54%, up, and it's up 20 basis points in a couple of weeks. And next week is a union budget and followed by the RBI policy. And both these events are going to be pretty much negative for the bond markets. The union budget will signal high borrowing as government pumps in money on subsidies, given sharply rising energy costs and fertilizer prices and agri input costs and others, as well as the fact that RBI will worry about the effect of Fed rate hikes on Indian financial markets. The Sensex and Nifty have exhibited a tremendous volatility. They have fallen consecutive days. They have fallen many days in succession, and has fallen sharply from highs. And if it continues to fall, and if IS pull money out of equities and bonds, then the rupee also can hit record lows. And all this will weigh on RBI's minds as they go into the policy meet, along with the fact that they have to manage a high government borrowing program. And if all that has an effect, then rate hikes is on the cards in India as well. And all this will take its toll on the GSEC yields. So the market has been very, very negative into the next going into the beginning of February with so many events that is stated. And in other US Treasury yields also marked Fed's rate hike stance and inflation worries rising to 1.85% on the day of the FOMC press release. Now, what is the best way to protect yourself? You choose the right bonds, short maturity bonds that can give you a good return. Download Quickiness from INR Bonds, our app for retail investors and financial advisors, where we have a list of bonds that you can go through the app and invest in seamlessly with all the information that you require to invest. All it requires is just a download from your iOS or Android device and get into the app and then select the bonds and go straight through the investment. Thank you very much for listening in. The download links for the apps are in the description below. And if you have not signed up for our YouTube channel, please do so.